stick with corporate debt. 13D Research had an article, a corporate debt reckoning is coming, and maybe that's why the Fed is doing what they're doing. 1 in 6 U.S. companies is now a zombie, meaning their interest expense exceeds their earnings before interest and taxes. JP Morgan analysts estimated that fallen angels, which are companies that drop from investment grade to high yield, will total $215 billion this year, more than double 2005's record. So again, this just comes back to like reality versus liquidity.
Right. So you're saying this is another point that why are the markets rallying when we have this data staring us in the face of an economic calamity?
Put it this way, if you're trading or investing based on the news, and I don't mean like the headlines, I just mean like reality, you have to be smashing your head against the wall right now, right?
I'm sure there's a lot of people. You wonder how many people that sold after we were down 20, 25% and said, I'm sitting this out until we're down 40 or 50%, and then this happens. You're right. I'm sure there's a lot of people who are saying this makes no sense. And these are probably, again, the people that are mad at the Fed for saving the system. They want their price discovery. This is what can make markets so maddening because a lot of times they just don't make any sense.
Yeah, so I'm sympathetic to people that are in that position because this is tough.
But are you really, though? I mean, you have to invest in the markets as they are, and you have to believe that the Fed is going to do everything they can. And so this is just another point to why you don't go to extremes in the market. And
but how? No, of course. I'm just trying to take the other side. How hard is it to, like, what type of mental mathlete do you have to be to say, okay, things are so bad and they're going to get worse. This is going to be the worst economy that we've seen in a long, long time. Yeah, it'll be temporary, but it's going to have ripple effects like we've never seen before. However, the Fed is going to do everything they can, and therefore I'm bullish. Like, come on, that's really tough.
I don't think you say you're. I can't believe anyone would be bullish at this time. That would be a weird way. But I think you can say I'm confused-ish, and I'm not going to just assume that markets are. This is why it's so hard to play in this game because they don't make sense most of the time, and it's you're trying to think like 8 moves ahead, and maybe this is a good. People always say, "Oh, markets are so efficient." Maybe markets are smarter than people give them credit for,
or dumber,
or maybe the market is naive, and these people are really smart. But sometimes it's like this 4th level thinking that you have to go to in a situation like this, where again, this is like the first time we've had this known unknown in our life of the recession was just sitting there on a platter for everyone to say, okay, yes, we're going into a recession. And you just knew it, and you know it's going to get bad, and you know it's going to get worse. And I do agree. It's bizarre that the market is looking past this stuff, and it almost seems like the market is like a vanguard investor right now. Like the market is thinking long term that we're going to get past this, which is crazy. And obviously there will be probably stops and starts where things do look bleak and it lasts longer than they think and the market gets hammered. It'd be way too soon to say we're completely out of this mess. But this just shows how hard this game is. It's just not easy.